Hello, everyone. A very warm welcome to you. I want to start by specifically thanking you for coming to watch this video today. We know your time is super valuable, so we really appreciate you spending a part of your day with us.
Absolutely. Thank you so much for tuning in. We've got a really great deep dive planned for you today.
We do. Today we are unpacking the Q3 2025 earnings call for SurgePays. That call took place on November 13th, 2025. And for those of you who might not be familiar, SurgePays is a company operating right at the intersection of wireless tech and financial services.
Right, and they have a very specific focus. They target the underbanked and underserved populations. So they're providing essential telecom and financial tools to a demographic that traditional banks and big wireless carriers often just overlook.
Exactly. And the structure for today's discussion is going to be in three parts. First, we'll break down management's prepared remarks regarding their growth strategy and the Q3 financials. Then we're going to transition into a play-by-play of the Q&A session with the analysts.
Which is always where the really interesting details come out.
Oh, definitely. And finally, we will wrap things up with our big picture takeaways. So let's just jump right into the management presentation. The CEO, Brian, kicked things off by highlighting some serious operational growth, specifically with their Lifeline program under the Torch Wireless brand.
Yeah, the numbers here are frankly staggering. Back in June, they had about 20,000 subscribers in this program. By November, just 5 months later, that number jumped to over 125,000.
Which is just massive growth. And I think it's important to clarify the why behind this. The Lifeline program is a fully funded government benefit.
Right. It provides wireless connectivity to qualifying low-income individuals. And Brian made a very strategic point here. He emphasized that this is a stable, recurring revenue base because it's completely unaffected by government shutdowns.
That's a huge distinction. It's not a temporary grant that might vanish. Plus, management noted they're actually still operating below capacity.
Yeah, they're still opening new sales channels. So that 125,000 subscriber mark is really just where they are right now, not where they're stopping.
Okay, so that's the government-subsidized side.
Yeah.
But they also broke down their commercial ecosystem, which involves their prepaid and point-of-sale services. This is under the LinkUp mobile brand.
And this is where the retail strategy shines. They have this concept called phone in a box.
I love that name. It's so straightforward.
It really is. It's sold at convenience stores, and it's exactly what it sounds like. You buy a box, and you get a smartphone, a SIM card, and 30 days of service all ready to go. And the financials on this side are incredibly strong. Point of sale and prepaid services revenue hit $13.1 million.
Which is a 177% increase year over year, right?
Exactly, 177%. But the real magic isn't just selling the physical box, it's the recurring revenue. They launched LinkUp Mobile in April with about 10,000 users. By July, they had 20,500. And now they are sitting at over 95,000 recurring subscribers.
That recurring piece is key. And management really emphasized that the backbone of all of this is their proprietary point-of-sale software.
Yes. That software is the engine. It facilitates the transaction right at the convenience store register, but it also drives that recurring revenue when customers come back to reload their plans. It locks in the store owner and the customer into the SurgePays ecosystem.
Speaking of store owners, we have to talk about distribution. They mentioned the major partnership with HT Hackney.
Right, HT Hackney services 40,000 stores. That gives SurgePays a massive distribution footprint, and their stated goal is to ramp up to 100,000 locations on the SurgePays platform through organic growth and new agreements like this one.
So they are aggressively expanding the physical footprint. Now let's pivot to the wholesale side of the business, the Hero program.
This is their MVNE model, which stands for Mobile Virtual Network Enabler. Basically, SurgePays provides the back-end billing and the SIM cards so that other companies can launch their own wireless brands.
Right, they provide the infrastructure. And they noted they've onboarded 3 MVNO partners so far. The really interesting competitive advantage here is that SurgePays has direct carrier access.
Which is rare for a company of their size. It gives them much better margins and a lot more control over the network provisioning.
Okay, so moving down the tech stack, Brian also talked about ClearLine and their strategic partnership with Corpay.
ClearLine is their new SaaS marketing platform. It is currently active in 17 Market Basket locations. The Corpay partnership is brilliant because it integrates marketing tools like digital coupons and loyalty programs directly into the payment processing terminal.
So the customer is interacting with the marketing right at the moment they pay. It's super targeted.
Exactly. Now, arguably the most forward-looking part of the strategy was what they called the pivot. This is a new data initiative utilizing a platform called Digitize IQ.
Yeah, this was fascinating. They basically re-engineered a legacy system so they can focus heavily on subprime consumer marketing.
And the strategy flips the traditional acquisition model on its head. Normally, a company pays a lot of money to acquire a customer. SurgePays is building a platform to actually monetize the consumer data during the intake process.
Right, so when someone is signing up, SurgePays can present them with third-party offers. And they generate revenue from those offers, effectively making money while acquiring a new wireless subscriber.
It's a brilliant way to offset customer acquisition costs and build a high-margin revenue stream.
Definitely. Okay, so that's the operational side. Let's look at the hard numbers. Tony, the CFO, delivered the financial results, and the top-line revenue growth is massive. Total Q3 revenue was $18.7 million.
Up from $4.8 million in Q3 of the previous year, that is a 292% increase year over year.
292%. That is hyper-growth territory. And looking at profitability, they are still operating at a loss, but the margins are improving.
Significantly, the gross loss narrowed to $2.6 million, which is a big improvement from the $7.8 million loss they reported the previous year. Tony also mentioned they expect the Clearline segment to hit positive gross margins by the end of 2025.
Which would be a great milestone. I also noted that they've been tightening up operating expenses. SG&A selling, general, and administrative expenses decreased by 32.5% to $4.2 million.
Yeah, they achieved that mostly through reductions in contractor and consultant expenses, so they are becoming more efficient as they scale.
However, the bottom line was a net loss of $7.5 million, or about 38 cents per share. And we need to talk about the balance sheet.
Right, the cash position. They ended the quarter with $2.5 million in cash.
Which is down quite a bit from the $11.8 million they had at the end of 2024.
It is a tight cash position for a company growing this fast. But despite that, management sounded incredibly confident. In fact, Tony reiterated their revenue guidance for 2026.
Right. They're standing firm on that $225 million revenue target for 2026.
Which implies they expect this triple-digit growth to continue.
Okay, so that covers the prepared remarks. Let's shift gears and dive into the Q&A session to see how management handled questions from the analysts.
This is where we get to see the business model stress-tested.
Exactly. So the first question came from Ed Wu over at Ascendant Capital. And Ed was really probing the core target consumer.
Right, he was asking about the underserved market that shops at these convenience stores.
Yeah, his question was essentially, what are the store owners actually saying? And are these consumers truly receptive to these new tech and telecom products in the current economic environment?
And Brian's response here was really illuminating. He laid out what you could call a tough times thesis. He argued that economic uncertainty is exactly what drives people to seek out value.
He brought up a pretty wild statistic. He said that over the last 4 years, the subprime market has ballooned from 100 million people to 137 million people.
That is a massive demographic shift. And Brian explained how SurgePays turns this unfortunate economic reality into a win-win-win scenario.
Break that down for us. Who are the three winners?
Well, first, SurgePays wins because they get access to a rapidly growing customer base that desperately needs affordable options. Second, the convenience store owners win. During tough economic times, store margins get squeezed. SurgePays gives them a new revenue stream by paying them commissions on wireless activations and bill payments.
Which is vital for a local bodega or corner store.
Exactly. And the third winner is the consumer. They get access to lower-cost telecom services, and in many cases, they can get free wireless service using their Snap EBT cards.
So the business model actually thrives when consumer budgets are tight. That's a powerful counter-cyclical dynamic.
It really is.
Okay, let's look at the second question, which was also from Ed Wu at Ascendant Capital. This time, he asked about industry consolidation.
A very common concern in retail.
Right. We see major corporate brands buying up independent convenience stores all the time. Ed's question was, will this consolidation impact the SurgePays business model? If a big chain takes over a mom-and-pop shop, does SurgePays get kicked out?
And Brian used a great phrase here. He called the convenience store market a case study. He pointed out that even when a huge brand name goes up on the storefront, the local operators usually maintain a lot of autonomy.
Especially regarding what goes on the counter near the register, right?
Precisely. They control that point of sale real estate. But Brian highlighted an even more important factor: operational stickiness.
The ACH integration.
Yes. SurgePays isn't just a vendor delivering a physical product. They are directly integrated into the store owner's checking account via ACH to push and pull commission money.
So they are tied directly to the store's cash flow.
Exactly. Brian argued that this direct financial relationship builds a level of trust that survives brand changes. When you are the system that reliably drops commission payments into the owner's bank account every month, consolidation doesn't hurt you. The new management isn't going to rip out a system that is actively generating profit.
That makes total sense.
Yeah.
The deeper the financial integration, the stickier the product. Okay, we've covered the presentation and the analyst Q&A. Let's pull back and provide a high-level wrap-up for you all. Looking at everything we've discussed, what are the main themes here?
I see 4 distinct themes coming out of this earnings call.
All right, let's go through them. What is theme number 1?
Theme number 1 is rapid scale. Going from 20,000 to 125,000 Lifeline subscribers and jumping revenue by 292%, that shows the company has transitioned out of the building phase and into aggressive execution.
Yeah, the demand is clearly there. What's theme 2?
Theme 2 is the economic hedge. Management has intentionally positioned SurgePays as a beneficiary of economic downturns. By serving that growing demographic of 137 million subprime consumers, and by helping store owners supplement their income, they've built a highly resilient business model.
It's almost built to weather a recession. Okay, theme number 3.
Theme number 3 is the tech ecosystem. It is so important to realize they aren't just slinging prepaid phones. They are building a moat. The combination of the proprietary point-of-sale software, the Clearline marketing platform, and the new Digitize IQ data monetization strategy, it all creates a deeply integrated ecosystem that is very hard for competitors to replicate.
They are embedding themselves into the infrastructure of the store. And the final theme.
Theme 4 is their 2026 ambitions. The management team is resolute on that $225 million revenue guidance. Every strategic move they discussed on this call, from expanding the HT Hackney footprint to flipping the customer acquisition model, is designed to hit that specific North Star.
And it's going to be really interesting to watch them navigate that growth, especially managing that tight $2.5 million cash position along the way.
Absolutely. The execution risk is real, but the strategy is clearly defined.
Well, that is all the time we have for our deep dive into the SurgePays Q3 2025 earnings call. We really hope this analysis gave you a clearer picture of their strategy and the mechanics behind their growth.
It's definitely a unique model to keep an eye on.
Thank you all so much for watching. If you liked the video, please click like, share the video, and subscribe so you can stay tuned for our upcoming content.
We appreciate you spending time with us today.
And as we sign off, we want to leave you with one final thought to mull over. As SurgePays continues to build out their Digitize IQ platform, what happens to the retail tech industry when monetizing consumer sign-up data becomes more profitable than selling the actual hardware itself? Does the phone just become a free Trojan horse for the data ecosystem? Think about it. Thanks again, and we will see you next time.